There you go. All right, cool. Um, so last week Wednesday was Thursday. Wednesday, or we're somewhere in here, and I know since the start of I believe like around here, I've been telling you guys I'm just not convinced that this will continue mooning. I'm more so leaning towards the downside, and that's still hold on, hold on. That might be an important message in case you can't up on. Oh, okay, cool. We're good. All right. I thought somebody couldn't get in. Um, but yeah, it's just like this entire move. It looks better on Euro USD, but just in this perspective here, I'm not convinced that this wants to go higher. I'm not convinced at all. Even though the fact that monthly closure tomorrow is going to be iffy, um, does look better on here than it does on Euro USD for downside momentum. As you can see on Euro USD, it does look still pretty just stupid. Um, but the thing is these monthly candles, right? They're always started or sketched out through M1, then H1, then H4, then day one, then weekly, and then we get to monthly. So you must understand every bias on every time frame, correct? So knowing that, right, we're just at a point now where it's like it's getting to a point where I really want to see this move. I don't care if I catch the move, but I just want to see it move, because once we see something move, right, now is when we can start catching the reentries and just start riding the wave. Like it doesn't matter about catching the low and high; it's just a matter of catching the move itself, right? So we're at a point right now where I'll easily see people trying to sell Euro USD, and I really don't see that happening. I really don't see that happening, especially here, right, on Euro USD. Right, if we're looking at this from a closer perspective, right, we bottomed out last week. I couldn't figure out exactly which candle this came from, but what mattered to me more was the actual daily closure, which was this, right? And once you understand that, and then that also gave us a very good weekly closure, right? Pretty much a hammer. Um, Once we zoom into intraday, right, you can see, right, the clear BOS here, right? And then from there, just consistently making higher lows and continuing higher. So, do I want to pull back? Yes. Will we get it? Probably not. Um, if anything, we might, see some type of retracement. It's what I would like to see, but I don't see price coming back down here and even grabbing somewhere around here, because there's always that possibility that that's an H4SC, I believe, something like that. Yeah. So there might be something in this candle, or even still, there might be something in this inefficient pricing. So that's what worries me about just seeing this start rocketing. But at the same time, it's not that realistic to me to see this just come down and then go all the way up. Right? That's not really that realistic to me. So even though we see that there's inefficient pricing here, that doesn't necessarily mean that it has to come back to do that now, right? It'll do it eventually, but it doesn't have to do it now. Um, so knowing that, all you have to do now is just continue trend. And if it doesn't give you a trend, just chill and let it play out. Because even though I don't really see that being realistic, it's very possible, because from a even smaller intraday time frame, right? This to me looks like a BOS. Potentially, if we're able to reject anywhere here, which is premium pricing. However, if that high breaks, then that's a wrap. This is going to take off from there. But the only reason why I'm inclining to this, that hopefully we get a pullback here, is just due to the fact that this is very impulsive. and the corrective move is taking so much longer to correct itself, and that's where essentially I'm trying to like just trying to see what it wants to do from here. Um, in terms of like structure overall, it's still bullish, 100%. Especially because I like where this reacted from, right? So even if we surf through the time frames, you're gonna see, right? Here is your SC open, H1 SC. If you go to 30-minute, that is a 50% SC. So there was heavy confluence on this reaction, right? As you can see, perfect to the T. We even zoom into the, I believe it was 4-minute. This is where you see the best entry, right? So you see the confluence of this SC here that took out previous liquidity here, even took out previous liquidity here, and then took off. And there's also inefficient pricing sitting just right inside that SC open. So that gives it enough confluence for me to try to get any type of confidence in that move. And as you can see, we just bounced off of that inefficiency, and it's going now. So if anything, we'll see what happens London, but I want to see what reaction we get from this POI, just anywhere in this area, especially because that is considered swing premium. Right, we're already in a premium area, so it's just a matter of waiting and seeing what happens. But just, I mean, today was just overall sloppy, and I mean, you guys can see that. You guys know. I was anticipating the fact that we would get another.
Yeah, sure.
Yeah, hold on. Yo, please mute y'all's mics. Sergio, can you mute everybody, please, except me? All right, cool. I think we're good now. Yeah. All right. So continuing on, I was really just trying to wait to see if we were going to get another wick down, or if we were going to close like this. And I miscalculated this morning in the fact that I wasn't really paying attention to just how New York played out. I mean, not New York, London. So as we saw in London, right, we got the reaction to the upside through Tokyo and then through London. And we got this reaction during overlap. That reaction there. And that's what we caught there. But the issue with that trade was this would have been considered either, you can consider either a type of equal lows, even though that took it out, or you could just take it as a very deep retracement. So I was anticipating, right, catching the move here, which I did, catching the move there and just writing this down because I was going off of the two previous daily closures. But unfortunately, as you see, right, we didn't take out the previous low. And something to note here is to know why it didn't happen. Right, so I actually saw this happen right before my eyes, and I just neglected it. Do I know why? Nope. But I just neglected it, and that was this. I neglected the fact that we accumulated to an extent, right? We have our pre-supply, selling climax, secondary test phase B, another test to the secondary test phase B, right? We give that reaction and essentially test the automatic rally, and now we get the spring, and that spring, right, took out the previous liquidity, right? As you can see here, it took it out, and we got the perfect reaction here. Right, you could use that, or you could even use the whole candle, right? Either or, fine. And this entry would have been just about 2 pips. Yeah, I wouldn't. Like I said, I don't like going under 2 pips, even though it's very possible you can, but it's just not as realistic. And you're just essentially trying to um, force the reversal to an extent. And also spread can do you wrong, or your B-book broker can do you wrong. So it's just, I want to give that room, and I believe 2 pips is like solid. Um, so I neglected this, the fact that this accumulated, right? And it broke structure here. Right, broke structure there. So now it accumulated, it broke structure. So in theory, based off of Wyckoff, I should be looking for re-entries to take this higher, because in terms of cycle, if this accumulates, this won't come back. And it didn't. It never came back to the spring or even the secondary test phase B, or the secondary test B, I'm sorry. So as you can see, it never came back. And from there, it just dipped. Right. So I literally saw this happen like right at New York Open, and I didn't take it just because, for one, the price was already up here whenever I saw this like already happen. And two, I was really counting on that daily bias, which was, even though I'm bullish on it, I got to trade what I see, not what I think I see. And what do I see? I see two pretty much wicks to the downside to signify that we're potentially seeing downside movement. But here is the fix to that, right? So we use the daily, right? But I'm pretty sure a lot of us don't use H12. And H12 signifies just essentially the movement shown during London. And well, just until like right before London closes. No, actually not even until mid-London, I'm sorry. So the 12-hour closes for me at 4 a.m., which is 3 hours. No, yeah, 3 hours before New York and 6 hours before London closure. So understanding what happened in between the new day all the way to London session is crucial. And I didn't see this, but as you can see, the 12-hour closure for before this morning was this engulfing. Oh shit. Where is it? Was that engulfing? So this alone, if I would have seen that at the time, I would have known, yeah, this is not going to be bearish anymore, because this already wanted to show us bearish movement, right, in this inverted candle here. And the reaction to that was an engulfing. So that just shows to me that there's not enough selling pressure showing. And either way, we're bullish on it long term. So it benefits that bias. So like I said, I didn't see this in the morning. So that kind of, messed me up a bit. Because if I would have seen that, then I would have most definitely bought that accumulation. Silver. Yeah, I would have most definitely bought this knowing that. And not only that, but this happened literally right at New York Open. New York Open is at 7 a.m. for me. Right? So that's automatically a confirmation. Number one is we're seeing something, a potential schematic form right at the open of overlap, right? Which is what we preach on, is the kill zone. Right, 7 to 10 a.m. for me. That's CST. Obviously, you guys can do y'all's own times. And if you don't know, then you can just easily go to this. Easily go here, and this will tell you exactly. You just put your time zone, and you know exactly when each session will pretty much start and close. But yeah, I mean, it's a learning experience, not just for you guys, also for me. Especially once Rona ends, all this Rona stuff ends, we're definitely going to see different types of movements, different types of behaviors, and it's our job to essentially adapt to those and pretty much learn how to capitalize in that new market condition in comparison to what it is now, where it's really sloppy. But I hope you guys get what I mean by that, because this is going to be the first shift for pretty much all of us, because we've all pretty much started trading no more than 3 years ago, honestly, every single member. no more than 3 to 4 years. So now that we're approaching essentially a new era, it's going to be interesting. But never fear it. It's a good thing. This is where we essentially learn, and then once we master this new market condition, then we know that we can at least benefit off this for like another 10 years until we see another quote unquote recession. But yeah, I think that's good for today's rant. Do you guys have any questions or anything with today? Cool, we got 30 people in here. You guys can unmute yourselves. I don't mind.
Hey Fredo, what's up?
Hold on. Let me put my volume up. Yeah, what's up?
I trade Nasdaq, and I was like a little bit confused because of the momentum he has on the downside, and where does he rebound? So I mean confused about the direction. Today that it was like the moving upward, I realized like that's bullish now.
Mm-hmm. So
with this movement, I think I think like maybe that's a fake out or something.
Well, for one, bro, what's your structure? Damn.
I saw that.
So even from an intraday basis, right? This is our low, but if we zoom out, structure is definitely bullish, especially in the intraday, and that started right from here. We had a low, and then we broke a previous high, created higher low, and then from there we just been creating higher lows. So you automatically should know that you're in bullish structure. So let's go back to this morning. Let's say 6 a.m. Yeah, 5 a.m. The hell? Oh, I can't do that on this. That's stupid.
You can use another chart also. I use another one.
This one. I like the pricing on this. But I mean, I can literally already see like where you kind of went wrong, and this is bullish structure, right? You don't be deceived by that, right? Because even though there's high momentum and there's high volume, you got to understand what that means. That doesn't necessarily have to mean fake out. That just necessarily means that this move has a reason to why it's going that down there that fast in that manner. So once you literally, even by looking at this time frame, I can see why that reaction happened, right? Well, for one, there is a potential SC here. Potential doesn't mean it's valid. Let me do this, right? And then alongside that, you see inefficient pricing there, right? So just by knowing that, right, that gives you a reason to why this happened, right? And not only that, but also this is something that I've noticed. I don't really speak on it too much, but look at this impulsive move, then look at the reaction, right? Where this is creating an incentive for buyers to buy, right? Buy this candle closure there, right? So it's odd to me that they're trying to give us an incentive to buy right above a POI. Right? Does that make sense?
Yeah, I understand now.
So,
yeah, I was a little bit confused because of that strong move.
Mm-hmm. So yes, this is strong, but this reacted and then gave you another push down on unsupported volume. So how does it make sense that we're continuing lower on smaller volume in comparison to this big volume here?
Yeah, I didn't take that in consideration.
So exactly. So now that you understand that, right? Even, and just so you know, volume candles, or these, whatever you want to call them, volume strips, whatever, they they close or they stop moving at the candle closure. So after this candle closure, it still gave you time to enter, right? Which is where now you look for an entry. So now let's zoom in and let's see what you could have done. I might start trading equities low key because these move so nice. Like just looking at this now, these move so nice, and they make you a lot of money.
Yeah, I'm using right now like a funded account on topsteptrader.com.
Oh, really? How's that going?
Yeah, it's great. I already passed it.
Nice. But yeah, looking at this now, right? We have the downside momentum coming in. Well, the last part of it, because we understand that it's on, this is happening on unsupported volume. So we get that first reaction there, right? Either you could have entered there and set any stop below the POI, or you could have waited, right? Let's delete that. So now this is now your point of interest, right? Like I said, we do the entire candle on M1 time frame. All right, so now anywhere in this candle is your entry. Well, anywhere in this zone now is your entry. So you could have waited for, you already see 2 rejections, right? So normally I see 2 rejections like that, and then I see one last push down. I say fuck it, and I'm trying to take that trade because now that's high probable. We just reacted from a previous POI, and we're showing rejections, and then we're showing one last push. So that to me is more than likely a fake move, and that's when I take that trade. Or if you wanted to be extra conservative, you could have waited for this full reaction to happen. Full reaction happened, and trade came back to fill an efficiency here, and then it took off. So in theory, right, you could have taken opportunity anywhere in here, right? Stop loss right under the POI, and you take that to the moon, or you take POI number 2, right? Also stop loss under the previous POI. Oh shit. All right, your targets are previous highs, which are first swing target is there. Damn, this is so nice.
Yeah, bro, that's crazy. That trade's crazy.
Let's see. Yeah, so cool. So to that swing point, that's already a 20-1, I believe, on the first entry. 26-1, yeah. And the second entry, if you chose to wait, let's just do the real math here, just because I don't want to half-ass this. All right, so the original entry, if you would have taken it from there, is 50. Wait. That's wrong. Okay, anywhere, it's about 25, right? About 25. And second entry is a 66, right? So you could have taken the riskier entry there, or you could have taken the conservative entry. But notice, even though you catch less of the move on the re-entry, you catch a much better risk to reward, right? So this is why I tell you guys, like, don't worry about catching the bottoms and highs, just to be pretty. Like, I do it to be pretty, but you don't necessarily have to put yourself in that type of risk. Whereas if you wait for a more conservative entry and you get an even smaller stop loss size, then boom. And what's crazy is how many points is this? It's 267 points. So that's about 2,675 pips, which is crazy because on a 0.01, that's 200. Am I doing that math right? Yeah, it's about $267 on a 0.01.
Yeah, if you trade it on futures, it's like for contract, it's like 4,000 per contract.
Oh, okay, okay. It varies by broker though. It's not the same. Like IC Markets has different contract sizes than Hugo's Way. Hugo's Way has different contract sizes than Coinex. So it varies by broker.
Yeah,
And you can check that in your MT4. Just go to your details on the pair. But yeah, I mean that's a solid trade. I like that. That's very nice. But yeah, I hope you see now, like structure, bro. All it is.
yeah, Fredo. Thanks
Without
for your
structure, you can't
explanation.
skip that ever. Yeah. And here's a cool thing too about stocks is if you backtest and look into this, they fall faster than they rise. Literally all of them, whenever they fall, it's fast and it's quick. But then to recover or to even come back up, it's so slow. Right? Prime example, look at this. This is a 13% drop in 10 days. But to recover that, it took it 37 days and it never came back. So the whole momentum rule wouldn't apply to stocks or to equities. That's just a quick note for you guys. It won't work just because stocks fall faster than they rise.
Yeah, that will help me now.
Mm-hmm.
I haven't seen that before.
Yeah, that looks nice. Yeah. So let's see. So you were trying to sell this then?
No, I was trying to sell that inefficiency over here.
Yeah. So you caught like the move here down.
Yeah, but I
Yeah,
think
that broke even. That's fine. No, yeah. Yeah, so you see now, yeah, the momentum rule doesn't affect, I mean, it doesn't cater towards equities or stocks. I should have really noted that, but that's my bad. I don't really trade equities, that's why. Yeah, but that's a dope trade though. 61. Yes. That would have been probably like 120% there if you take that correctly. Yeah, let's see. What are you guys saying?
Hey,
Anybody have any
Fredo.
questions? Yeah, what's up?
Hey, you mind checking out EuroCAD for me, bro?
What were we looking? What were you saying?
So I'm on the daily time frame. Looking for a buy, but I mean, shit, momentum's clearly to the upside. I mean,
You gotta
in
give it
my
time, bro.
opinion.
Gotta give it time. That's straight up your POI, whether it wants to reject inefficiency or wants to reject SCs inside there. So at this point, bro,
Just
whenever
watch.
you catch reversals like that, I like to find a continuation, and then try to hedge that buy because there's always a chance that this will fall.
Mm.
There's always a chance that this can just die, especially due to the fact that that's a strong monthly closure, and then also right, this is looking pretty, like it wants to go up. And if oil goes up, then XXX CAD goes down, right? And then we already got a reversal here. The reversal's happening right now, so this looks pretty bullish. So unless this gives you anything else, and that presents a buy opportunity in anywhere in the POI that I showed you, then you should just continue trend there. Because yes, I understand that this is looking corrective as fuck, but this can easily fail, right? Prime example up here. H4. Where was it? I'm trying to remember where it was. Oh, it was right here. It's right here. right? So from an intraday standpoint here, right, this looks corrective. Right, that looks corrective. It gave the reaction, but it didn't give the follow through.
Hmm.
So that's what you got to watch out for. Is just pay attention to the structure, and just don't let this happen. All right, because this happened because we're in a monthly distribution. Technically, depends if we get a reaction here, but obviously that's gonna take a very fucking long time. But I do like the fact that we cleared everything up there. But obviously that bias there is generated through the monthly time frame. So from an intraday basis, I shouldn't be surprised that this happened. And as you can see now, where's this now? Yeah, see, look at that. So we actually already got monthly closures. No, we didn't. No, we didn't. We get it in 18 hours. Yeah, we get monthly closures tomorrow. So something to look for. But yeah, I mean, always pay attention to those closures on weeklies and monthly. Yeah. Yeah, see, look at this 2-month closure. I would like to believe that's bearish. And then also look at this. Actually, let me just do squares. So when you zoom out, we're actually, the structure doesn't necessarily mean it's bullish.
Okay, yeah, I see.
But yeah, you just gotta pay attention to everything, bro. From the 12-month, that's why I have every single time frame here. 12-month to 1 minute. Every single time frame matters.
Appreciate it, bro.
Yeah.
Hey Alfredo, could you possibly go over AJ? What I had thought was reaccumulation.
Let's see. Reaccumulation, where?
I think it was on the 1 hour from yesterday's New York session.
1 hour?
Yeah.
Looks sloppy. So you're thinking that we're in reaccumulation right now.
Yeah, I had thought that.
I mean, I'll believe that. I mean, just look at this. Just looking at straight off the monthly. I would already agree with that bias. And I don't know if I want to consider it reaccumulation just because it doesn't have the structure to it. Like usually, this is where people mess up with Wyckoff. They try to think that's Wyckoff. That's incorrect. Right? Notice the diagonal nature. That's just a bull flag. Where in reality, Wyckoff is a range. Right? Now notice the horizontal nature to it. Right? Does that make sense?
Yeah.
So this is giving diagonal nature, which means that this would just be a continuation of impulse.
Okay, yeah, because I've done that before where I kind of get stuck where I try to catch a spring or something, and instead of looking at like that horizontal range.
Yeah, that's pretty much the biggest flaw, bro. I mean, literally every mentor that considers himself a Wyckoff trader does that same mistake. Every single one of them, because they just believe in the logic that 3 drives reversal. That's what they think. That's what they believe in, which is fine. I mean, If it makes them money, cool. If it doesn't, I don't care. But we know that schematics are horizontal nature. That's why they're horizontal on the chart, on the actual schematic itself. Right? Because it's not just about what it is, like we've talked about. It's about what is happening and why this is happening. Right? Once you understand that, that's how you're really going to get the breakthrough with Wyckoff. And reaccumulation, like, let me just show you the schematic. Right? You see how it shows the horizontal nature as well?
Yeah, that's a huge difference from what I was looking at.
Mm-hmm. Huge difference. Every single diagram you'll ever see of Wyckoff has that horizontal nature.
So for reaccumulation, how do you measure the equilibrium?
So I usually measure equilibrium after phase C. So which would mean in this term the automatic rally, or if the automatic rally is broken, and then the spring, or the second ST if it's a schem 2. So that's how I measure it, because in theory, when we're looking, let me pull up a markup. Hopefully I did it right on every markup, because that's usually how I like to do it. Yeah, like here, you can see this. All right, so this equilibrium of range, that's what's showing me that we're now actually shifting momentum. Right, so this is merely to assure the fact that this is the U up thrust and this is the LPSY and this is the second LPSY. That's how that makes sense to me, because in any point before that it doesn't make sense, because there's always the fact that in phase C you can get a UTAD or an accumulation, you can get a spring, or you can just get an LPS. So you have to wait for phase C to finish.
Okay. Yeah. Thank you. Yeah, that makes a lot of sense.
Yeah. I've never explained that. So yeah, that's my bad. I thought it was a given. But yeah, as you can see here, it's measured from the automatic rally from the bind climax, and then the up thrust. That might be a bit off, actually. Hopefully not. Oh well, doesn't matter.
So would you use the rising rally and the up thrust because that's like the lowest to highest
The low
point?
the low and the high, yeah.
Okay. Oh, okay.
So if this up thrust would have caused an SOW here, and it would have broken the automatic rally, then the SOW would have been the low.
So then would the SOW be like a break of structure?
It could be, yes, but remember, what we speak on structure is that anything beyond like a 90% retracement is already showing signs of reversal.
Okay.
Which is why, as you can see, this is like a 90 to 95% retracement from this low to this high. So this would be like 90 to 95. So that's inclining me to either wait for the UTAD and catch the UTAD, or as we can see here, we got an SC move there. And it never came back to this SC, which means that it's 100% valid.
Yeah. Yeah, thank you.
Yeah, no problem. Back is killing me. But yeah, is everybody good? Are we chilling? Is there any questions with anything so far? Are the videos back up? Is everything good on the website? Yo, is that like less loud now? Did y'all hear the bark? Is it less loud? Oh, that's a bet. Yeah, because I got the foam and I put it all over my window and it worked. So you see now it's way like less loud. That's a great investment. That's a great $20 investment. Like I literally have the foam. I'll send y'all the picture in the chat. I literally have the foam all over my window, and then I have the blinds and everything, or just everything around there. It just covered.
Damn, I can't believe we finally fixed it after a whole year. Nah, probably like 6 months. But yeah, I think I'm gonna just stop the recording there.